Well, hello, everyone, and thank you so much for joining us today. I'm looking forward to introducing the passive income opportunity with Alamo Mortgage Holdings. We've got a very exciting presentation today. We'll go through how you can earn passive income by working with Alamo Mortgage Holdings. We are a United Kingdom company that purchases American mortgage debt. I'm going to go through all of the benefits of that and how our program works. But first, before I do everything, I'm required to give a disclaimer. So I'm going to do that briefly, and then we'll get to the fun part, which is the actual presentation. So as accredited investors, you will be aware that all investments carry some level of risk. This investment is only available to investors who are able to assess their own appetite for risk. Please read the risk statement within the investment memorandum before investing. All right, well, fantastic. Now that we've got that done, let's go through the presentation here. So we have the fact sheet here. We offer 8% passive income mortgage note investing. The mission of Alamo Mortgage Holdings is to provide passive income to non-US accredited investors and institutions by purchasing real estate-backed mortgage notes in the United States in the state of Texas. And we're only buying in the state of Texas. I'll describe why that is a bit later in the presentation. And we provide liquidity to owners of these mortgage notes. We help them cash out these mortgage notes. Our investors and institutional partners are able to receive long-term passive income. So the team that we have working for you at Alamo has 200 years of business experience with 100 years of experience in the mortgage note industry in the state of Texas. We make everything so easy for you. We collect all of the payments. We get the passive income deposited into your bank account, and we can work with multiple currencies. So if you would like to purchase a bond that is in British pound sterling, if you want to purchase something that's denominated in euro or US dollar, we can accommodate all of those. Our suggested minimum investment is £100,000, but that doesn't mean, folks, that if maybe you're just getting started with Alamo Mortgage Holdings on our annual investment program, maybe this is the first year you've invested with us. We can work with you if you want to do a bit less than that. We're happy to have you as an investor, to have you as a bond buyer. And we offer 8% interest paid biannually. So very good on that. Now let's discuss the team. So as I mentioned, our team has 200 years of experience with 100 years in the mortgage and real estate industry in Texas. Our team members, they've managed investment funds, companies, and real estate projects, overseen up to $1 billion in financial assets. Members of our team have worked with clients including BG Group, Bissell, and Everett's. As for myself, I have studied with Eddie Speed. He's actually in the United States, the largest private note buyer. He's purchased over 50,000 mortgage notes over his career. He's probably up over 100,000 now. And then I also am involved in several other companies and startup businesses. We have Marina Zaharelska. She's our international investment coordinator. She actually speaks 5 different languages. So if you are an investor and you have a favorite language that you'd like to discuss your investment in, there's a very good chance she speaks one of them. She graduated from the EU Business School, and she's very smart, brings a lot to our team. We have Scott Wynn. He's an experienced mortgage note buyer. He has over 30 years of experience. He has experience with acquiring mortgage debt, also getting mortgage debt to perform better. He's a specialist in what are called junk assets. These are assets that, for whatever reason, the payments have stopped being made. He is able to work out plans to get those things producing payments again. So he's a real asset to the team. We have Fred Hobbs, and he is our director of mortgage servicing. He also owns another company called SecureNet Loan Servicing, and I can't say enough good things about SecureNet Loan Servicing. They are really a first-rate company. If you need servicing for your mortgage note, you should definitely sign up. You should do some business with Fred and his company, because they just do a fantastic job of keeping everything well organized. But as far as Alamo Mortgage Holdings, we have an agreement with SecureNet where they actually handle all of the collections, all of the tax escrow, all of the insurance. Everything is handled there so that we can focus on the core business of acquiring mortgage notes, and also keeping track of all of the information on that. We have David Jones. He's in the state of Texas. He's a third-generation lawyer. He is our in-house counsel for Alamo Mortgage Holdings. Super experienced lawyer, very, very knowledgeable about the real estate industry. And he helps us with looking over all of the legal paperwork to make sure that everything is in the correct order. He also helps us with, if we need to do something with a loan that's not performing, he can actually handle every phase of that. We have Anna Kulikova. She's with Investor Relations. She's originally from Moscow. She speaks several languages and she works with investors. We have Mark DeRuyter. He is our Chief Technology Officer. However, Mark is much more than a normal Chief Technology Officer. He's a very experienced software developer, and he has extensive experience in the mortgage industry. He has written commercial mortgage software that's used to service mortgage notes and keep track of all of the payoff amounts. So he's a real asset to the team here, and he brings a lot to us. So now let's talk about the financial product and how you can benefit, how you can obtain passive income. So you've got a choice with Alamo Mortgage Holdings. When you purchase one of our notes, you can get a 3-year or a 5-year, and that pays 8%. And we also offer a 50-year. Now, let me explain. People will ask about that. Why so long? That is a product that is more designed for institutional investors, that they're looking to do something with the duration of their portfolio. But it's also available to high net worth accredited investors if they're looking to, maybe for their family, secure a long-term income stream that provides 50 years of income. So that is something that can be quite interesting. Now, I want to put this into perspective here, where you can kind of get a sense of, hey, if I purchase one of these bonds with Alamo Mortgage Holdings, how is that better than just purchasing a UK gilt? And this actually is a great graphic, because it should really provide some clarification on that, where you can kind of get a sense of it.
Today I want to talk about something that is very interesting. And this is, if you are an investor that's an accredited investor in the United Kingdom, you may be wondering what is going on with the 30-year Treasury gilt yield. So let's take a look at this and talk about it for just a minute, and then we'll compare it to Alamo Mortgage Holdings, our yield. And I'll give you a hint. Alamo Mortgage Holdings has a far, far higher yield. So if we were to go back to, say, the year 1980, the highest that we have here is around 1981. The yields were running about 13, almost 14, 13.5, 14%. And then you notice how over time, the general trend has been largely downward. I mean, we look here and we see that the yield as of, for example, 2016, if we look at 2016, the yield's like 1.4%. And then if we go all the way down to May of 2020, the yield fell all the way down to 0.57%. Now it's starting to slowly go back up. And as of this video, December 2022, the yield was at 3.678%. So let's just kind of compare that. Let's imagine that you buy gilt, you would get a 3.68% yield if you were to purchase a 30-year gilt. But now imagine that you instead decided to purchase an Alamo Mortgage Holdings bond. How much would you make? Well, that is a great question, and I'm happy to answer it. So basically, with an Alamo Mortgage Holdings bond, you'd be getting right here at 8%. That's a tremendous improvement over what you can get on a gilt. Now, I know a lot of people are going to say, but a gilt has a zero default risk. I get it. I understand. But here's the thing, folks. You're getting such a low return on a gilt that you may want to consider if that actually makes sense to you in terms of what you're dealing with there. Because if you were to instead purchase an Alamo Mortgage Holdings corporate income bond, which is the bond of a UK company, you'd be earning right at 8% yield. And if we were to go back in time, you wouldn't have seen a yield like that for many years. You would have seen the last time gilts were giving an 8% yield was looks like it was right around let's see, when was it? 1996, so almost 30 years. So in the last 30 years, it hasn't gotten close to an 8% yield. So that's worth thinking about. If you would prefer to get an 8% yield, and you understand that it's not a government-backed guarantee. It is backed by collateral, though. It's backed by mortgages. It's something that you definitely should consider. Be happy to chat with you about what Alamo Mortgage Holdings can do for you in terms of providing passive income. And I wish you a fantastic day.
Okay, so fantastic. That clarifies what is the advantage there in terms of how much of a benefit over purchasing a gilt. Now, this is something that for our friends in the United Kingdom, I really encourage you to think about what is going on here with your exchange rate relative to the dollar and with inflation. Because I have seen so many investors in the United Kingdom that they're normally so sharp, they're smart people, but for some reason they have this blind side where they only think in British pound sterling. And I want you to watch this video and please think about your own portfolio. Think about if you might be in a situation where this is relevant to you.
Now, let me go through this here. If you're looking to purchase gilts, let's say you're looking around and you bumped into this video and you're looking to purchase gilts, you probably are in the situation where you want a reliable way to obtain passive income, and gilts would fit this requirement. The problem with gilts, though, is they are denominated in British pounds, and the pound has a decades-long history, a tradition of losing value against the US dollar. Another problem with purchasing gilts is that the returns they offer are lower than corporate income bonds. They're always lower. Interest on all registered gilts is payable gross without deduction of tax. Holders of gilts on the register maintained by CIS may opt to have tax deducted at source by applying to CIS. Gilts, of course, have their merits, and for an investor, this is important. Gilts have their merits, and for an investor that can turn a blind eye to the high rates of inflation. So if you're the type of investor that can see all that high inflation in the United Kingdom and you can just shut your eyes, turn a blind eye and say, I don't see it, that is one of the requirements. The second requirement is if you can also, with your other eye, turn a blind eye to the weakening British pound, if you can just ignore that for decades your pound has lost value against the dollar. Ever since Bretton Woods, it's lost and weakened against the US dollar. Then if you're that type of investor, then yeah, you can accept gilts and you'll get paid on time and you'll get some passive income and it'll be great. And they're index linked and you can go to sleep and just, you turned a blind eye on both of the problems and hey, everything's good. Yet the fact that gilts are easier to purchase and more well-known does not mean you will earn as much interest. If you were to instead purchase my company, Alamo Mortgage Holdings, we offer a corporate income bond. If you were to purchase a corporate income bond through Alamo Mortgage Holdings, you could potentially earn hundreds of basis points more per year on your corporate income bonds than those old gilts. If you're interested in purchasing a bond, you can contact me directly by emailing ben.miller@alamomortgageholdings.co.uk or call me. I've got a US number, 1 for the United States, and then area code 817-203-4160. We can have a discussion about your passive income goals and also your investment goals. If after that discussion, the product seems suitable for your investment portfolio, you then can sign some paperwork that will be prepared based on the term of the bond you are looking for and some other features. If you currently have British pounds and you want to exchange for US dollars, that's easy to do. We simply handle the conversion for you and then your bond is paid in dollars. At the point it is converted, you have made a dollar denominated investment and no longer will potentially lose money on the exchange rate if the US dollar keeps rising against the British pound sterling. If you are in the situation where you have pounds and normally would want to purchase gilts, but you're looking at all this inflation and the pound endless.
So that's real relevant. That's something that I ask you to think about, if that makes sense.
Now,
Okay, so now let's take an example here of how would this really work in practice. Let's imagine there's 100,000 mortgage debt that pays a 10% rate of interest. Say that this debt is purchased for 70,000. The yield, even though the interest rate's still 10%, because the mortgage note was purchased at a discount, the yield has increased to 14.2%. And that is what ultimately allows us to pay out the 8% to our passive income investors. Now let's talk about how do you actually determine the value of a mortgage note? It is so important.
So then what determines the value of mortgage debt? Because we know what determines the value of real estate. Real estate is determined by the value of a particular flat or house. It's determined by what are comparable houses and flats, what do they sell for? That determines the value. If it's a commercial property, it's determined differently, where it's determined by the cash flow on the commercial property. But for this example, if we talk about a mortgage note on, say, a property of maybe a residential home, there's 6 factors that determine the value of a mortgage note. The first factor is the buyer. So if you had a choice between buyers, say you have a property and you're trying to decide who to sell the property to, and you've got one person that is a government employee, and that government employee has a high salary. They've been working for many years for the government. Maybe they work as a post office person. Maybe they deliver packages for the post office. And they've been doing this for 10 years. If the government is their employer, you know there's the very high probability they're going to get paid on time. But if you have another buyer that says, you know, I'm 24 years old and I just started my new company. and I'm just going to make a bunch of money with my company. And they don't have a regular income, but they have a plan where they're going to make money in the future. That sort of buyer is far less desirable. It's better to sell the asset to one that has regular government income, the government employee, or the one that works at some sort of a big corporation. Maybe they work at Microsoft, maybe they work at Google, maybe they work at some big corporation. That buyer is more likely to be able to pay, where they are not going to have cash flow experiences where the things are up or down. The second thing that determines the value is the collateral. So the collateral means the actual asset. So let's say that the property is worth 100,000. Say that's the market value. That's the real value, 100,000. But say that you had a seller that he sold the property with a note for 200,000. Pretend he found somebody who didn't know the prices, and that person agreed to pay 200,000, even though the market value is only 100,000. You have to treat that note differently, because the fact that he found somebody that signed a note and the asset's only worth 100, but he found someone that signed a note for 200 does not make the note worth 200. You could look at that note and you could base it on the value of the collateral. So that's a mistake, is a lot of times people don't look at the collateral, they just look at the value of the debt. And when they see the value of the debt, they may not have properly analyzed what's the collateral worth. The third factor that drives the value is the down payment, the money that the buyer initially paid. So let's say you had two buyers, one that put 30%, 40% of the purchase price, where if it was 100,000, maybe that buyer put down 30,000, 40,000, 30 or 40%. And then say another buyer said, you know what, I want to buy this. I'll pay you the 100,000, but I only have $1,000. I only can put down 1,000. Can you finance 99,000? And the seller agreed. So they both agreed to buy the asset for 100,000, but one of them put down 20,000. Another put down only 1,000. The one that put down the larger down payment is better, because there's less risk of the person saying, you know what, I don't want this. I'm just going to leave. I'm just going to move. I'm just going to, do, because he's got virtually nothing to lose. He lost $1,000, his down payment. But the one that put 20,000 or 30,000 down, he lost a lot more if he walks away from the deal. So that's why you look at the buyer's equity or their down payment or their upfront money. That's an indication of the value. So a buyer that puts down 10% is better than a buyer that puts down 1%. The fourth thing that's important is the actual interest rate. The interest rate on the note. So if you have a note, if you have a mortgage debt that pays 10% or 12%, that is better than a mortgage note that only pays 5% or 4%. So if you had a choice between two notes, two mortgage debts, and the first paid 5% and the second paid 10%, the one that paid 10% is better. The next factor that drives value is the history of the payments. So when you buy these mortgage debts, you want to look at how long has the person been making payments. You want to be careful buying a new note. You want to see a record of how long the person has been making payments. So if a person has a 30-year note, and they are 4 years into a 30-year note, where they still have 26 years left, that is safer if you see a record of payments compared to a 30-year note that the person put the down payment down, but they haven't yet made their first payment. Because what if the person just walks away? What if they don't make that payment? Then you've bought a note that is a non-performing note. You want to buy a performing note. A performing note is more valuable than a non-performing note, because then you don't have any work to do. You just buy the note and the borrower makes payments to you. So a performing note is better, and the history of performance is important. The next factor that drives value, the sixth factor, is the actual paperwork, the legal paperwork, if it was done properly. Because if you have a note that was just two guys that were sitting around a kitchen table and they worked out a deal and they wrote it up without a lawyer, where they just wrote up an agreement and they signed it, that is less valuable because the note likely has mistakes. They're not lawyers. They just agreed that, yeah, I'll make payments to you for 30 years. Did they remember to put in any of the legal language? Did they know how to put any of the legal language in? These things are important. That type of note is less valuable than a note that had a proper closing at a legitimate company with legitimate lawyers that drafted the paperwork. Because you know that it's very likely that if you buy that note and the borrower doesn't make payments to you, you have legal recourse. You don't want to buy a note that hasn't been drafted properly, that doesn't have proper legal paperwork.
That is so important. Really, really important on that. So now let's take an example here where we look at an actual deal. And this is not something we have in our portfolio, but it is selected because it's a representative property. So this is a real property that's in Sweetwater, Texas, and the asking price is $120,000. Let's imagine that the seller was approached by a buyer, and the buyer agreed to pay $20,000 down. The buyer agreed to make payments to the seller, not to a bank with a mortgage, but to the seller on a mortgage debt of $100,000 that had a 10% rate of interest, 30-year amortization. So the monthly payment was $877.57. And now imagine that you are in the position where you're going to buy this note. Let's say that 5 years have passed. There's 60 payments. The buyer has been making payments. There's 60 payments. If you want to earn a 12% yield, the most you could pay for that, because the unpaid balance is about $96,000, the most you could pay is about $83,000. So now let's talk about why this would happen. Well, what happens is a buyer may want to purchase a property. They go to the seller. The seller says, well, you know, I know a great banker. Go talk to my banker. They'll make you a loan. So then the buyer goes to the banker and says, hey, I've got a $20,000 down payment. I'd like to buy this house from the seller. He said you could help me with a loan. And then the bank looks over the information and says, no, we can't help you. You're self-employed. You don't have a reliable source of income. Oh, and you have a low credit score. So no, we won't make you a loan. So then the buyer goes back to the seller and says, I tried, the bank wouldn't make me a loan, but I really want to buy this. I'll make payments to you. Please let me make payments to you. I need a place. And they had a discussion back and forth. The seller said, well, listen, I'm not going to loan the money to you at a low interest rate like what a bank would. I mean, if you want to borrow the money from me, I want a 10% rate of interest. And they agreed on this. And that is the origin of these sorts of notes. It's not the only origin, but that's an example of how this might be created. Now, this is so important for our friends in the United Kingdom. Because despite all of their intelligence, and many of them are great investors, a lot of times they do not think outside of the United Kingdom, or we say think outside of the box. And with this, if you look at the long-term history of the exchange rate with the British pound and the US dollar, you will see towards the end of World War II, when Bretton Woods agreement was reached, they had it set up where 1 British pound could purchase about 4 American dollars. And then you just look at the history over time, where by 1967, 1 British pound would only purchase $2.40 American. And by 2008, 1 British pound would only purchase $1.50 US. And by the 1st of January 2023, 1 British pound only purchases $1.21 US. Now that is something that is real relevant to investors in the UK, because they may be getting an 8%, they may be getting a 10%, they may even be getting a 12% rate of return. But if those returns are denominated in British pound, and if 100% of their portfolio is in British pound, that is going to be something they want to think about, the movement of that exchange rate, because an 8% return paid in dollars versus an 8% return paid in British pound over many years can have a tremendous impact on the buying power. And this is true if you travel, if you remember traveling where you'd go from the United Kingdom, from the UK to some other region, you used to have more buying power, and now it seems like the money doesn't go as far. Well, this is part of what's going on there. And it's something that I think that investors should seriously consider if they want to keep 100% of their portfolio in British pounds, or if it might be prudent to do some not only diversification across asset classes, but across currencies. Maybe keep some of your portfolio in British pounds and keep some in US dollars. That might be worth thinking about. So now let's take a look at what Alamo does. We purchase packages of mortgage notes, and sometimes I get asked, what's a package of mortgage notes? Well, I'm going to show you a real package of mortgage notes here so you can kind of get an example. This is the type of package that Alamo Mortgage Holdings would purchase.
This right here is actually an example of what a portfolio of loan notes might look like. So this is actually a real portfolio. And you look here and you can see the name of the borrower, the number of months. You can see the interest rate. This debt is actually pretty high, 14.75% is what they're paying on that mortgage. The monthly payment is $278.50. Then you can see the terms, the status, this sort of thing. So, I mean, you've got a list here, and this is an example of a package where a package of these mortgages can be purchased. This type of deal would be done by a larger investor. It would not typically be a single investor that would buy this package. For example, my company, Alamo Mortgage Holdings, this is the type of package that we might actually purchase, something like this. But if you're just starting out in investing, you might start out by, you're just going to buy one mortgage note. So for example, you might come in and this mortgage note, if you find something like this out on the market, you might try to negotiate down from, the unpaid balance at $89,570. Maybe you try to buy it for $59,000 or $69,000. But that would be one note. But you can also purchase packages of notes. And that's something that Alamo Mortgage Holdings is involved with. It's a company that's a United Kingdom company that actually purchases packages of mortgage notes. So wanted to give you an idea of what a package of notes look like.
Fantastic. So that's an example of a package of mortgage notes.
So
Now let's talk, why bonds? I get this question sometimes from people. They say, why in the world would I buy bonds if inflation is so high? Shouldn't I just have it all in stocks? Shouldn't I just go put it all in cryptocurrency? There's a lot of people that put it all in cryptocurrency, company called FTX, that are regretting not staying with something that's more conservative and established. So why bonds? Well, rather than give my opinion, I'm going to talk about a Nobel Prize winning economist, Harry Markowitz. He won the 1990 Nobel Prize for economics for his contributions to modern portfolio theory. And modern portfolio theory, as most of you know, this is something that's integral to the way that investments are done. But it's so interesting how Markowitz actually handled his own portfolio, because he didn't do it that same way. With his own portfolio, he would put half in stocks and he would put half in bonds. And then once a year, he would adjust. So if the stocks went up a lot in value, he might sell some stocks and purchase more bonds to kind of adjust the percentages. And I want you folks to think about your own portfolio. I have a feeling some of you don't have enough bonds where it's 50-50. It might be worth thinking about. It might be something to consider if you should think about the idea of adjusting your portfolio. That is so true. Why Texas mortgage debt? Sometimes people say, well, why Texas? Why not another state? Well, there's a lot of reasons for that. Texas is a state that's growing, and people are moving from California and from New York into Texas because Texas offers a good standard of living. And that has the effect of it increases the demand for real estate, because every time somebody from California comes in, they want to buy some real estate. And every time somebody from New York comes in, they want to buy some real estate. So it increases the demand for the real estate. And Alamo Mortgage Holdings, our assets are in Texas real estate, where it is secured by Texas real estate. So the more that the demand increases for Texas real estate, the better it is for us and for our bondholders, because the collateral backing the loans has increased in value. It is something that is so relevant, and Texas also has legal advantages where it is easier to enforce your rights in Texas than in a state like New York. New York is a state that is much more on the side of the borrower. Texas is a state that's much more on the side of the lender. So those are some things that are definitely relevant. So what are the advantages and key features of the bond? Why should you take action and do something with us? Well, first of all, we can help you reach your passive income goals more quickly. If you already have a lot of capital and you know exactly how much passive income you're trying to get to, we can help you do that. And we can do that in about 30 to 60 days. If you've got enough capital, we can get you to your passive income goals. But let's say that you're just starting out, maybe you've got a few years left to work, and you know how much passive income you want, but you're not going to just assume that you're going to sell your business, because I've seen a lot of dentists, I've seen a lot of doctors where they think that their practice is their retirement. And oh boy, that can be an unpleasant experience when their practice doesn't sell for as much money as the valuation report that they ordered says it should sell for. So that is relevant to have a backup plan that is not just, I'm going to sell my business, sell my practice, and that's going to be my retirement. So that's real important. And with Alamo, we can get you on an annual investment program where each year you put in 50,000 pounds, 100,000 pounds, 200,000 pounds, depending on where you are. We can work with you and help you get to your goals. Another thing that's unique is we offer maximum diversification, because you're not just investing in one mortgage note. That's a bad way to do it, to just buy one mortgage note. It's so much better to invest with a team that has access to these sorts of assets. You saw an example of the package of mortgage notes that we might purchase. That is something that you can participate in, but you have none of the work and none of the headaches. It's pure passive income, so much better, and it's diversified, because if one note stops paying, there are other mortgage notes still paying. Another thing that's great is we don't charge our investors any fees. Now, folks, I know in today's day and age, the idea of not charging your investors fees, it just doesn't make any sense, because the private equity and the hedge fund guys, and I'm not giving those guys a hard time. I'm not saying they don't deserve their fees. I've got a lot of friends that are in that business and they'd be real upset. But, I tell you, if you invest with Alamo, your money's not going to pay fees. Your money is going to purchase mortgage notes, and that allows us to earn passive income and pay you passive income. So it's a lot better. You talk to these private equity and hedge fund guys, they got 2 and 20. I mean, they've got it down to a science. And but if you would prefer your money not to be burned up in those fees, and you would prefer something that offers passive income, Alamo Mortgage Holdings has a solution for you. And the other thing that I would also say, a lot of people, they are so in love with private equity. Well, folks, listen, a third of private equity fails, completely fails. a third of them break even. So you've got a 2/3 chance of the best you can get out of private equity is a break even or losing your money. Does that sound like a good thing to bank on? I mean, just think about that. Whereas with this, it may not double your money, but at least it's something that provides that passive income long term. That's what a mortgage note's designed for. So let's take a look here. Let's say you invest 100,000 pounds. Well, in a year, you'd get 108,000 pounds. If you invest for 5 years, you'd get 40,000 pounds in interest and you get your 100,000 pounds back. And if you did the 50-year option, you would get 400,000 pounds in interest, get 100,000 pounds back. So that's how it works. Who should invest in the notes? Well, I believe that if you are seeking an above average return on investment, Alamo Mortgage Holdings has a solution for you. This is a product where if you want more than average, if you're content just to be average, you don't need Alamo. You can just go buy a gilt and hope that the safety that you get in that gilt is not offset by the massive inflation rates and the movements and the exchange rates. But I wouldn't recommend it, folks. I wouldn't recommend it. If you prefer something that is asset backed, our mortgages, our assets are backed by real estate. Or if you're looking for passive income, that is something that we specialize in. If you are looking for something that is a 3 to 50-year term, and this is something where we work with you on that, we give you all of the opportunities. It just depends on what you want to do. Another question we sometimes get asked is this suitable for your self-invested personal pension? Well, that is a great question. And I can see no reason that it would not be. However, you need to check with your SIP provider. But folks, if you've got one of those SIP providers that just for whatever reason doesn't seem to understand what we're doing or doesn't seem real helpful, call us, because we know a lot of other SIP providers and we can put you in touch with one that wants your business and that understands our financial product and that can help you. But hopefully you've got an intelligent SIP provider that can follow that you're investing and you're buying bonds in a UK company. So corporate income bonds is what you're buying. Is it a regulated product? No, this is not a regulated product. And that's part of the reason that we can offer so much higher on the rates, because we haven't had that additional expense of going through registration. That's a very expensive process to go through registration. And we just pass that on to our bondholders where we can pay a bit higher there. But I want to make that clear. This is not a product this is not a product that is regulated. So who can invest? Well, folks, judging by I've got some good news. One of the requirements is that you must be over 18. And looking at our audience today, I am pleased to say that I am totally confident everyone in here is over 18 and will be able to invest. So that is some good news for us. Another thing is if you have a trust or a company or a charity, all of these are eligible to invest. Are joint applications permitted? Yes, we welcome joint applications, and you can also invest through a company. And then again, this is a corporate loan note, not a government loan note. You're not buying a gilt, but I think that's clear at this point. How's the tax managed? We pay all the money to you. We just pay all the money to you, folks. We don't take any money out for taxes. We pay it all to you because everybody has a different tax situation. You know your marginal tax rate. You know what's best with your advisors. You know how much you want to pay or you need to pay in taxes. We just pay everything to you, and then that's up to you and your advisors how you handle it. Are there any limits on how much you can invest? No. Our suggested minimum is 100,000. But folks, if you want to get started with something less than that, we can work with you. We welcome new investors, and we're fine with that. And if you're an institutional investor where you're looking at doing a larger placement, we can absolutely work with you very closely to get things the way that you need them structured so that it's suitable. Can you get access to the money early? No, folks. This is not like day trading where you can just buy and then, oh, the stock went down, I'm going to sell at a loss and I'm going to get out. Obviously, this is a different financial product where it's illiquid, but that is part of the reason that it pays so much. The fact that it's a bit illiquid, we can pay more, and we pay into the bank account that you nominate. How can you invest? It's easy. Just contact us on our website. Go to alamomortgageholdings.co.uk, fill out the contact form, let us know you'd like to invest. We can get the process started, and we make it so easy, folks. We do everything quickly and efficiently for you because we want your business. We're happy to have you as an investor. You can also call me anytime. I've got a US number. You can dial +1 for the United States and then 817-203-4160. So that is it for our presentation today, folks. I'm going to stop the recording now, and then I'll be happy to answer any questions. But I want to thank you all for coming. It's such a pleasure to see everyone. And I want to encourage you to please take action. Don't just watch this and think about it. Take some action, because this is something where the sooner you get started working with Alamo, the sooner we can start paying you that passive income, and you can get on the fast track to passive income. I hope that helps, and I wish you all a fantastic day.